Thank you for joining me. I'm Alex, and I want to talk about Progressive today. So, what they do is insurance mostly, and they're obviously one of the few sectors that's largely unaffected by the current crisis. Obviously, people are driving less, which actually helps them because people can't really cancel their insurance. So they're making more money and they're paying less money, which is obviously a good thing. Company is starting to reopen, so pretty much going back to normal, I would assume. I really don't think that there will be a huge impact even from a recession because, again, people can't really cancel their insurance. Current price $79, which gives them market cap of $46 billion. Dividend yield is 0.51% with the lowest payout ratio that I've ever seen. I don't think that anything under 25% is really very common. So 6.6%, pretty amazing. Revenue $39 billion, up significantly. Earnings $3.9 billion, also up 50%, so huge. PE of 13 with a forward PE of 14. Obviously, that estimate came at earnings, which was in December, if I recall correctly. So that's not a guidance for the current situation or what's happening right now. I would expect them to be able to hit that, though. Total assets $47 billion, total liabilities $41 billion, which gives them a total stockholders' equity of $14 billion, which is about $3 billion higher than the previous year. So obviously all things going in the right direction, and that quite significantly. Revenue growth of 20-ish% is pretty huge. Earnings growth of 50% is pretty huge. PE of 13 is pretty amazing. Balance sheet getting better. Obviously fairly balanced on the assets and liability side. So not really a great balance sheet, but definitely a nice balance sheet. So for a growth investor, I still wouldn't recommend this stock because I don't think that 20% revenue growth is really sustainable and 50% earnings growth is really not. So I don't think there's really a huge opportunity as a growth stock here. For a dividend investor, I think that if you can hold on to the stock for literally decades, I think it will be a decent stock, especially with a PE of 13. They could be growing their dividend quite significantly over the following years. So I wouldn't expect much of a return in terms of dividend, but I wouldn't expect the stock to lose value either. So reasonably safe, especially payout ratio of 6% is just amazing. So if you wanted a dividend stock that pays 0.5%, which still is beating the current bond yield, but that's a different story, you could invest in this. I probably still wouldn't recommend it for a dividend stock because the dividend is just so low that the income you get is not really worth it. For a value investor, I think that literally everything here is amazing news. Balance sheet growing by $3 billion, amazing. Revenue growing 20%, amazing. Earnings growing 50% is amazing. PE of 13 is amazing. The dividend is a small but nice bonus on top of that. So overall, I would say that if you're a value investor, I think this is going to be a very interesting company to look into at this point. That's it from me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.